Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you so much for tuning in to this Facebook and also YouTube live stream. Today's date, it is the 29th of December 2023. It is the last trading day of the year and it is also a Friday evening. Fantastic day, okay? What a day to close the end of the year of the stock market in 2023, okay? So if you guys can hear me loud and clear, please say a hi to me in the comments and in the chat box, okay? I'm very friendly, I don't bite, okay? So give me a like, share, and comments. I would really appreciate that, okay? This is the last day of the year, last day of the trading day of the year, okay? Give me a like, share, and comment. Let me take a look at the comments right now, okay? Okay, Dave, Chick Kwan, Wei Lun, Kelvin, Henry, AZ, Denise, CJ, Kenny, Sukling, Hadley, Susan, Bernard, okay, Mark, Agnes, okay, Emmanuel, a happy new year, okay, Kevin, ZJ, fantastic, good to see every one of you guys here. Okay, so before I kickstart this session, of course, there'll be more people who are streaming in, right? So of course, it is towards the end of the year. People is some of you guys maybe are still in holiday away from Singapore, and maybe some of you are going for some last minute Christmas shopping or with your family, that kind of thing. So I believe, tonight's session we also we will not have many people as previously also, but it is okay. Okay. Right now we are close to about 100 people. But just to let you know, okay, as I mentioned, I think I posted during the in the Telegram channel, I was asking, where is it? Okay, I was asking, hey, what day and what time do you all intend to change? Let me share. Sorry, I haven't shared my screen yet. Let me share my screen yet. Yeah, sorry about that. Okay, I was asking you guys, right, which day and what time do you guys prefer for the YouTube live stream? Okay, for 2024. So for those who don't know, for those who never subscribed to our Telegram channel, okay, I was asking in the channel, okay, I'm changing, okay, from a Friday evening, no more Friday evening, okay. So either it's a Monday evening or Thursday evening at 10:30 p.m. So about near to 500 people, 500 people, okay, voted. So I think approximately 60% of you voted in favor of a Monday evening at 10:30 p.m. Okay, so I will go with the majority. So I will go for Monday at 10:30 p.m. So the next Facebook Live will be, of course, 1st of January. It is a public holiday, 1st January. Okay, market is also closed. So the next Facebook Live will be on the 8th of January. 8th of January, okay, at 10:30 p.m. No more Friday. The reason, I think I mentioned to you guys before, the reason why I used to do Friday evening at 11:30 p.m. was because last time, during COVID, I started this YouTube stream, I think somewhere near COVID. There was, nobody can go out, circuit breaker. So I thought that Friday evening is a good time to share with you guys. And of course, at that time, I still have a toddler. Of course, now she grew up to be preschool already, and need to settle her until 11:30 kind of free lah. But now I think it's more or less okay already. I can start earlier. So Monday 10:30 10:30 said type okay, right? If you got it, if you get it, just type okay if you get it. So Monday 10:30 p.m. Okay, so let's kickstart this session right now. Okay, so disclaimer first, whatever I share, okay, in this sharing is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. So as usual, my Telegram, YouTube channel, Twitter, TikTok, okay, please follow them as many as you can or you could, okay. I'll post the link in the comments over here. And of course, if you haven't subscribed to our Telegram channel, I think you should, okay. YouTube channel, of course, if you are watching this on the YouTube channel, please take 1 second to hit the subscribe button, okay, so that every time we post some of the videos, you get updated as well. All right, so and also want to let you guys know that new year, okay, new outlook also, okay, how will the market pan out? we have invited different experts to share with you their insights and also their strategies and also the outlook for 2024. So Market Insights Virtual Summit will be held on the 20th and 21st of January 2024. Okay, I'll post the link in the comments. As usual, this is free. This is free. This is proudly sponsored by Plus 500, a MAS regulated CFD broker in Singapore. Okay, so Market Insights Virtual Summit 2021, January 2024 over here. So we have a number of new speakers as well, and the keynote speakers is Stephen Goldstein over here. Okay, so see, Stephen Goldstein is a trader performance coach. Okay, so of course we have a J-Tune, our resident speakers. We have a Boris, we have a Kayong, Raymond is a new speaker for us. Our founder of Turning Point System, Bruce Ming. Okay, spoken before. Hazel Soon is a new speaker. Okay, the chief trainer at the Joyful Investors. Ekyong. Okay, from Chris Long's side. Okay, he's also the principal trainer and mentor for Kryptonite Academy, but he's the first time he's speaking for MarketWise Asia for Ekyong. Okay, and Jessica Inskip, I think she spoke to us, I think one time during the NASDAQ Trading Festival. So of course we have old and new speakers as well, and of course many of them will share with you their outlook for the year. Okay, of course new year. I believe many of you guys are really interested to see how the market will pan out. Okay, what are the strategies, what are the sectors, or the kind of macros you should be aware of for this coming new year. So once again, I'll post the link in the comments over here. Okay, all right, and last call. Later I'll go through again. Okay, a short one. Seasonal Vantage Insiders. Okay, the January to the March data, it is already ready. Okay, we have hundreds of you guys inside these insiders already. Okay, not 100, it's hundreds of you guys. Okay, all right, I would say the exact numbers are they are quite a bit. Okay, so Seasonal Vantage Insiders. Okay, January to March. Okay, I'll post the link in the comment. So as I mentioned, this is the grandfathered price. This is the first time I'm launching, transiting to a member site. So it's going to be $99 Sing dollars every quarter. That's every 3 months. Okay, until 31st of December for this special grandfathered price. So as long as you stay subscribed, you'll be $99. Okay, every 3 months. Okay, after that, the usual price will be $179 every 3 months, every quarter. I'll post the link in the comments over here. Okay, so just head to seasonalvantage.com. All right, there's no coupon code or anything. $99 is the absolute lowest price. Later I'll go through with you guys once again. Okay, so let's kickstart this event, this session over here. So of course, this is the last trading day of the year. Okay, I think for those who have been with me in the Seasonal Vantage Insiders, right? I believe, okay, fantastic year. Okay, ever since, I mean that especially since the third quarter and the last quarter. Okay, actually many of the trade ideas that I posted is actually pretty good. Okay, if you benefited from it, just type yes in the comments, especially for those who subscribe to the current quarter one. Of course, there are a lot more who join for the new year. If benefited, just type yes in the comments. Just type yes in the comments. Okay, all right. Don't be shy. Let people know that you are inside Seasonal Vantage Insiders. If you benefited, just type yes. Mary, fantastic. Okay, Jimmy, yes, thank you so much. Okay, all right, some more. let people know. Okay, you have benefited from the insiders. Okay, so let's go through that. Okay, so let's have some fun fact. Okay, fun fact. I see a lot of yes. Thank you so much. Thank you. I think I see quite a number of old subscribers. I believe you guys have benefited. Me also, because I'm really using what I give you guys also, using the same thing as well. Okay, all right, so let's make a guess. Okay, fun fact first before I go to the roadmap of 2024. Okay, all right, so I believe many of you guys are interested to see how will 2024 will pan out. I'll give you my opinion. Okay, my roadmap, what I think it could happen. But before that, okay, the top performers in the indices. Who are the top performers in indices? Okay, I mean like the S&P, okay, NASDAQ, okay, these two, okay, NASDAQ 100 and S&P. Which are the top performers in the S&P? Any guesses? Make some guess. Which is the top stock? Okay, has the highest return in the S&P 500 index. Okay, all right. Let me answer one question. Kelly, I just paid for the seasonal partners report. Do we have the special weekly meeting or any updates for this? Yes, you should receive an email from me. Okay, just search for the SVI or just search for my email. Okay, there's the login detail. Okay, all the weekly videos are inside the membership area, inside the member area. Okay, I hope that answers your question. Okay. If you have any question regarding the SVI, okay, just drop me an email, okay? I'll answer them. All right. Deborah, Yan Kang, Mary, Calvin, not Microsoft, Mary, NVIDIA, yes, NVIDIA, okay, yes, correct, okay. So for those who don't know, Helios NVIDIA, NVIDIA, fantastic, okay. I think I mentioned before this site, but FinBiz, but it has been some time since I went to this site, okay. So FinBiz, for those who are new, you can go to FinBiz. All right. Alan, if I already have your Q3 seasonal data, do I still receive the same thing? No, Alan, because every year there'll be new data coming in. So some might be still the same, but quite a number should be different as well. Okay, all right. So FinBiz, okay. For those who don't know, FinBiz, I typed already. Okay, so FinBiz, okay, you can go to the screener over here. Okay, go on top to the tab screener. Okay, so let me try to zoom in a little bit. You guys can see, right? Because I'm a free user, free platform, so a lot of ads. Okay, so go over here, FinBiz, under the index, okay, under the S&P 500. Then you auto sort it out for you, filter for you. So these are the S&P 500. Under the performance, okay. Then click here. Then under the performance year to date, you can click and you sort accordingly. Of course, you know, FMC, Enphase are the worst. These are the Enphase is the solar energy. The a lot of ads over here. FMC, okay, agricultural inputs. FMC is the worst. Okay, 50%. Okay, the best performance. Okay, is actually NVIDIA. I try to zoom in. Can see, right? Can see, I zoom in very big already. NVIDIA, 240%. Okay, Meta, okay, 196. Okay, RCL. This one is the Royal Caribbean Group. This one is the cruise. Okay, I think there are a few. You might not be aware, like this. Okay, Builder First Source. Okay, this is industrial. Okay, it is up 158%. Uber is consumer discretionary. Okay, or under software, I don't know, but surprisingly, it's damn strong. Okay, all right. You take a look at Uber over here. Uber, okay. Actually, I also don't know about Uber until my friend alerted me. That, wow, Uber, towards the last quarter, it is super strong for Uber. Okay, super strong Uber and a lot of this. Okay, so you can look for this in the FinBiz and then can go for NASDAQ 100. Okay, I won't ask you guys the same question. So for NASDAQ, some of the stocks are similar like NVIDIA, Meta, CrowdStrike, okay, AMD, MDB, okay, all this. You can check it out yourself. Okay, if you want to use another alternative, right, you can go to Sleep Charts. Okay, sleepcharts.com. I think I mentioned before. Okay, go through some of these stocks. I mean, the fun fact, you can understand what are some of all these stocks. So go to Sleep Charts. Okay, I'll post the link in the comments over here. Go to S&P 500. You go to component performance over here. Okay, the date is until 28th of December. So almost the same, but very similar. Might have a few differences, but very, very similar. You can go to that. Okay, so Sleep Charts, S&P 500 performance, NASDAQ, it is also the same. Okay, so these are the things you can check it out for. Who are the worst one? You can check it out. Okay, so out of the S&P 500, I think, okay, not all stocks went up. Not all stocks went up. I think that there was one session where I go through with you guys. Okay, I think less than half of the stocks of 500 stocks actually went up, or at least generate a positive return. But now a lot more, which means that, okay, there's a lot more participation in the big cap, the small cap, and the smaller cap stocks. So until now, about 329 are in the positive territory. Okay, there are still, okay, about 150 of them, it is still negative for the year. Can you see? Not all stocks are positive this year. I repeat, not all stocks are positive this year. If you choose stocks, if you choose it wrongly, okay, you also get a very bad return this year. Okay, the worst one, okay, like I said, is the FMC, Enphase, Moderna, Pfizer. I mentioned before Pfizer, I think during one of the Facebook Live also. Okay, so which one is the top sector and top industry? Anybody can give me any answer or not? Sector should be pretty easy lah. Make a guess. I think quite easy lah. Sector, who is the top? Okay, there are only 11 sectors. Okay, is it like, you know, consumer discretionary, consumer staple, technology, communication, real estate? All these are the top sectors. Okay, any answers? Any top sectors or not? Yeah. Any industry? Okay, tech. Okay, Henry said tech. Ari said tech. That's pretty easy. Okay, the answer is tech. Industry. Okay, subsector. Okay, what are the industry that is the top performer this year? Any answer or not? Okay, you can also go to Finviz over here. Go back to finviz.com. Okay, under the groups over here, click on groups. Okay, sector over here. Okay, you go by performance. Hey, Shane, you are here. Why are you here? Okay. All right. So year to date, sort it out. The top sector, no surprises, is technology. Okay. All right. Comms, second best. Third is consumer discretionary. Not surprisingly, because in a bull market, typically, you know, consumer discretionary are the one that will move the market also, will move up also. Okay. And can you see that utilities and consumer defensive, they are mainly the defensive kind of sectors during the, you know, not so good market. So in a bull market, they tend to underperform some of these normal sectors like tech, comms, consumer. The rest, you know, like industrial, financial, basic, okay, not too bad, normal. But top three, tech, comms, and consumer cyclical, which is consumer discretionary over here. Okay. And if you drill down to the industry, make a guess now, who's number one? Okay, number one is semicon. Semicon is under the subsector of tech. Okay, residential construction. Okay, it's number two. So I mean that I think a few times I talked about ITB, or is it forgot? I talked or I talked to the insiders. I forgot already. So ITB, home construction, also very, very strong. Okay, since the start of the year. Okay, running higher, then a pullback, then boom, go up. So ITB is the ETF over here. It is very strong. Uranium, it is very strong. Okay, and all this, can check it out yourself. All this, okay. And of course, let me check the worst one. Solar. Solar is the worst. Okay, pharmaceutical retailers, silver, broadcasting, agriculture input, farm products, all these. Okay. So, so I hope you guys know where to find all these top performers. Okay, whether, you know, at the end of the year, at the start of the year, or in the middle of the year, you want to find what is leading the market right now, what is the top performance for the month, for the quarter, you know, for half the year, for year to date. You can go to Finviz. Okay, can everything okay? Just type okay in the comments. Shane, pay homage to the master. Shane is my friend. Okay, Shane is my friend. And also, you know all these resources, free resources to check it out. Okay. And okay, so I already mentioned about the top performers, the top sector industry. Okay, I just want to share with you guys the S&P 500 historical return. So this year, okay, as of now, I think very close up because we are in the last day already. Okay, last day already. So you can see from the S&P 500 year-to-date return, it is 25%, 24.5, approximately 25%. Okay, all right. The Nasdaq 100, okay, is a whopping, okay, 53%, 54%. Okay, so just want to ask you guys, okay, is the S&P 500, okay, is 25% a normal return, okay, or an average return? Okay, which means that, you know, every year typically about 20, 25, 30, 25, 25%. Is it a normal return? If yes, you think it's yes, just type Y in the comment. Okay, if no, you just type no in the comment. Just type N in the comments. Okay. All right. So, Link, you just subscribe to the seasonal budget. Can you post the login page here? You will also find it in the email. Check your email. In case you cannot find the email, check your spam. You should receive an email from me. So the seasonal advantage one is market wiseasia.com. Okay, sv-login. Okay, very simple. marketwiseasia.com/seasonal advantage sv-login. You should be able to find it in your email also. Okay, and Darius, last time, you know, is it you said that the worst sector this year will be very good? Yeah, you remember? Fantastic. Yeah, I think I'm one of the guys who said that also. Okay, so okay, typically, okay, it is the last year, I think tech is the worst or something like that. Okay, this year is the best. So kind of rotating. So this year tech is the best. Okay, it could still be one of the top few. Okay, but a lot of times it might not be the top. Okay, I don't know which one is the top. Do you remember, like for example, there's 1 year, I think last year or so, energy is the top. This year, energy is not the top anymore. Energy is kind of rotating out already. Energy rotating out. So you can see that for in the sectors, right? Energy, all right, is somewhere near the bottom. Not exactly at the bottom, but somewhere near. So kind of rotating. So when you see that a sector is like outperforming this year, the top, like for example, consumer cyclical or consumer comms, don't tend to extrapolate, okay, that you continue the next year. Okay, it might not continue the next year, or maybe, you know, finances can go account. What I'm trying to say that is that when it is the top, okay, don't be too happy. It might not continue next year. Okay, when it is at the bottom, don't be too sad also. It might not stay at the bottom next year. It always kind of rotating also. Okay, from bull market to the bear, from bear market to the bull. Okay. So I asked the question. Hey, nobody answered it. Yes or no? No. Yes. So say yes. Okay. I'll just share with you guys. So okay. Actually 25% return is not exactly the average. Okay. I'll post the link over here. Okay. I'll post the link over here. It's not exactly the average. So S&P 500 return. Okay. Since 1927. Since 1927 over here. So at least you know the history, okay? So at least you know whether it's a normal year or not so normal year, okay? So, okay, just based on the chart 1927 to 2023, okay, what can you deduce from this data over here, this chart? Okay, of course, blue bar means positive return, red bar means negative return, okay? All right. What can you deduce? Let me take a sip of water before I continue. Can shout out anything or not? Just shout anything now, okay? All right. So for me, first glance, very simple. Just first glance only, okay? Most of the time, it is positive, right? Okay, it is positive, right? Okay. A lot of time, the market tends to go higher, okay? There can be some down year, but the market rebounded very quickly, okay? Can you see that? Yes, Patrick PS said that there's more bull than bear. Fantastic. There's more bull than bear. So, try not to be a permanent bear. If you actually look at some of the Twitter, x.com, Twitter, you can see that a lot of people, you know, somehow still say it is a bear market. I don't know, 头脑派 or what, okay? 25% return, Nasdaq 50% return, they still say that it is a bear market over there. Wall Street link, okay, I'll post the Wall Street link over here. Okay, I'll post the link in the comment already. Okay, and can you see, just based on the chart over here, it is very often, right, when there's a down year, okay, it doesn't stay down consecutively, okay. A lot of times after a down year, okay, you rebound up the next year. Down year, rebound up, down year, rebound up, down year, rebound up. After a down year, you rebound up, down year, rebound up. Of course, there are, you know, exception cases where there's really a severe crash, okay, like 1920 plus, okay, 1930s, the depression, okay, many consecutive years, okay, and then 1930 something, consecutive years. But if you're talking about modern day, right, since about 1970 or 1970s, I think 1970 is a good gauge, right, about 50 years really, okay. Only 1973 and 1974, it is a consecutive of down year over here, okay, and then dot-com crisis, consecutive 3 years of down years, okay. Other than that, no more. So only two times, okay, 1970s and the dot-com, okay. The rest, a lot of the times, right, after a down year, it rebounded. So after, in fact, the latest, okay, is 2022, market has a down year. The next year, rebounded, okay. And looking at the return, okay, 25%, okay lah, but I would say that, average, you see the line over here, right? You can see that the peak over here, okay. You can see that normally, okay, over here, a lot more is about 20%, 15 to 20%. It is a kind of normal year. 25% still okay lah, but a bit outside the range already. It's still a good year outside the range already. Okay, if you guys learn something new from this, just type me in the comments. At least have a rough gauge, right? Whether 25%, 20%, 10%, it is average year or not so average year, or it's a good year or so. Okay, right? So at least have a good gauge, okay. So the S&P return, not S&P, the Nasdaq 100, okay, the historical return 50%, okay. Is it normal or not? Okay, 55% return, it is okay. There's also a lot of ads because it's a free site. Okay, never mind. You can see it is, well, of course, Nasdaq, the data is newer, okay, since 1987 only, but you can see that, okay, for the past 20 years, okay, all right, I think since about 2003, okay, all right, it kind of surpassed 50 something or 53%, okay. I think so, yeah, quite a lot that since the last one is 2009, surpassed 50%, wow, very long already, so 55%, it is not a normal year. It is a fantastic year for the tech company, the Nasdaq 100. Typically, the return also similar to S&P lah, okay, like 20 plus to 30% is still quite okay. That kind of area over here, the normal return, okay, the normal return over here. Okay, so Nasdaq, it is a fantastic return. So okay, I don't kind of think that next year you'll get the kind of 40, 50 plus return again. You can check it out, the past historical record. After a fantastic return, this one 1991, 60%. The following year, still positive, but not so good lah. Fantastic return in year 2003. Okay, the next year, still positive, but not so good lah. Okay, fantastic return in 2009. Okay, the following year, still positive return, but not so good lah. Okay, not as good as the prior year. Okay, all right. Can you see that over here that this one not too bad? 35%, 2013. The following year, not so good return also. Okay, not as good as prior year. Okay, and 2020. Okay, fantastic return, 50%. Following year, not as good as prior year. Now this year, okay, 50%, 55%. Do you think next year will be better than 55% or not? Yes or no? If yes, just type yes, or okay, no, just type no. Just type no. Okay, all right. I think the answer is very clear lah. Okay, all right. Answer is of course it might happen. For example, like the dot-com crisis 1998, then 1999, or even more. Okay, but I think these are outliers. These are outliers. I think based on historical data, I think there's a good chance that next year might not be as good as this year. Okay, all right. So at least you have a rough gauge of what is happening in the market. Have some, be grounded, okay? All right, don't think that next year, wow, like crypto return 50, 60% that kind, okay, can, so you guys have a rough gauge already of how the market works, historical return over here, okay? So now I'm gonna go through with you guys over here, all right? As you guys know, right, this year is the pre-election year, the year 3. So next year is the election year, okay? I think it will take place in about November. So this year, pre-election year, and I mentioned, I think many times, okay, pre-election year tends to be the best year out of the 4 years over here. Okay, all right. Election year, okay, is also not too bad, but not as good as pre-election year, which is this year, 2023. Okay, you can go to this equity cloud over here. They'll show you the seasonal chart for the pre-election year over here. Okay, let me go through this chart over here. All right, so this is the midterm. I'll post the link. So you guys will know the chart over here. Okay, pre-election year. Okay, you can see that. Wow, fantastic. Okay, pre-election year, that kind of thing. You can see that it just hit higher. Very good. This is the average. Okay, orange is the average. Okay, you can see that pre-election year, it tends to outperform the typical year. Okay, so next year, okay, 2024. Okay, all right, this is the election year. Okay, how do you think is the market? Okay, can you see that, based on the historical data, seasonality, okay, first January until March, okay, it's not so good over here. It can be kind of a ranging ping pong, or you can say that it is actually coming down, okay, or you can say that, grinding down a little bit again, and then tends to bottom in March. Okay, all right, so this is the data from 73 years, okay, 73 years until 2022. Okay, so we have a rough gauge of what the market is doing. But of course, I find 73 years a bit too long. Maybe you can look into the modern years, okay, like maybe 40 years that kind. So I actually dig through more data over here. Okay, more data over here. So I just want to share with you guys here. Wait, first, let me share this pre-election year over here. Okay, so this is the pre-election year. So this is okay. I changed it to 40 years. Okay, initially it was like 40 years lah. I think it is not clear what it meant, so I add in the pre-election year. Okay, and then add in 40 years. Okay, okay, so this is pre-election year. Yes, okay, pre-election year. So okay, let's go through some of the chart. Wait, give me a while first. So that I can do a side by side over here. This is the S&P 500. Okay, 1 year over there. Then, okay, maybe I use this. It'll be easier to see. Actually, it follow. Sorry, I think it's not moving as much that I want it to be. Okay, I think you guys can still see over there. Okay, so can you see that, based on pre-election year seasonal data over here, right? Can you see that? Can you see that February over here? Okay, this one is not telling you how high you'll go, but you can see all the the peak and the trough. Okay, at the top and the bottom, all these are the turning point of the market, during that year. Okay, can you see that February there's a peak over here? Okay, and the bottom March. Okay, there's a bottom over here. Can you see that? Can you see over here? Can see, right? So can you see over here that this is the pre-election year? It's this year. All right. Can you see that February kind of peak? Okay, and March around here it kind of bottom and go higher. All right, and then what else? Okay, and then can you see that over here? All right, May over here. Okay, it kind of have a turning point. The trough over here, the bottom turning point. May. Okay, May over here, right? Can you see over here? It is the same as well. It kind of follows the seasonality pretty spot on for this year. Can you see this is I'll do a naked chart. Okay, sorry, I'll do a naked chart easier for you guys to see. Okay, okay, easier. Okay, May over here, May. Okay, it is kind of the bottom over here, and then price start to go higher. And then can you see over here when is the top for this year? The top for this year is actually somewhere mid of July, near August, right, the top, and then the market go into a downtrend, a correction for about 3 months. Okay, so can you see over here, right? This is also the same at about July, mid-July there. Okay, it is at the top, okay, and then come back down. Okay, and then of course, you know, towards the end of the year, okay, the market for this year bottom somewhere near the end of October. That's November, and then that's the rally that's coming up over here. Okay, so this is the thing as well. Okay, not exactly the same, but pretty close. Okay, somewhere near there. Okay, and then hit higher. So for pre-election, it kind of follow the seasonality so well. I was actually quite shocked also. Are you guys amazed or not? If you guys are amazed, just type yes in the comments. Okay. All right. So I just want to go through. This is the important thing that's coming up. Very important already. Okay. I'm going to show you guys the 40 years. Okay. This is the roadmap for the election year. over here. Okay. This is the election year. Okay. Can you see for the election years? Okay. 40 years, 10 cycles, because every 4 years the election will be held. Okay. 4 years. So 40 years, I think good enough data lah. 70 plus years, almost the same. I mean, the thing almost the same, but I think 40 years is good enough. Okay. So at first glance, okay, what can you guys see from the chart? So now, just now I said already, right? Historical return, okay, we can expect, like, based on the performance wise, when the prior year is fantastic, the next year may be positive, okay, but we don't expect it to be as good as the prior year. So we have this in point, okay. And election year, we also know that pre-election is generally a better year, okay. Election year is still good, but not as good as pre-election, okay. And now you can see that overall the market is still kind of grinding higher, okay. All right, but can you see that, you know, January, February, March doesn't seem to be too well during an election year, and it tends to bottom in March. Again, this is not the exact high or low or whatever. This is telling you the turning point. Okay, the turning point could be in March. It doesn't tell you the magnitude of the move. I repeat, it doesn't tell you the magnitude of the move. Okay, I repeat, very important. It does not tell you the magnitude of the move. But it can tell the turning point. You can see that. So January, February, it seems to me that, you know, based on this historical data, seasonals, right? Okay, whatever you call it, January tend to be not so good, okay, and then kind of range bound in February, okay, and then hit the bottom in March, and then go higher, okay, and kind of choppy also, all right, and then peak in August, September, and then bottom Christmas rally over there. So this is the roadmap I want you guys to be keep in check, okay, right? This is not a prediction. This is not a prediction. Okay, I'm not sure about you. I think recently, I saw some, you know, YouTubers or analysts and kind of economists. They always say the kind of thing like, oh, how I predicted the 2003 stock market. Okay, or, you know, why I think 2004, 2024. Okay, the stock market is going to crash 80%. They have all this prediction. Okay, to me is that don't listen to all this prediction. Okay, remember. Last year, what did all those, you know, analysts say about all this prediction? Okay, it doesn't work out. Most of them fail. Okay, all right. And then for this year, a lot of gurus, analysts will say that, you know, this year might not be a good year. But what happened? Okay, in the end, 2023 is one of the good years, one of the better years. Okay, in the history of S&P 500. Okay, and Nasdaq. Okay, so once again, I'm not trying to predict the market. Okay, I don't know how the fuck the market is going to happen in 2024. Okay, I seriously don't know. Okay, I repeat, I have no fucking idea, okay, how the market will pan out in 2024. Okay, but I have a roadmap. Okay, the roadmap is this seasonal data. Again, okay, the market, okay, it is not going to repeat exactly like it is. Okay, but a lot of time it rhymes. Of course, it doesn't mean that, oh, the market will definitely bottom like in mid of March. It can be, you know, plus minus, okay, in the start of February or late March, that kind of thing. But overall, okay, I already said, I think last week or so, I said that I don't expect 2024 to be an easy year. Okay, I expect to be harder year than 2023. So harder year meaning that, you know, first quarter of the year, it tends to be like this lah. Okay, I'm predicting that market might not be easy, can be January coming down, then grinding down, you know, and then bottom in March plus minus, that kind of thing. Okay, so we don't look so far ahead. We don't look so far ahead. We just concentrate on the first quarter of 2024. Can or not? We just concentrate on the first quarter of 2024. So I think my opinion, I'm not predicting, I'm just my opinion that 2024, the first quarter might be choppy, not that easy. So do prepare for that. Okay. All right. So if you understand what I'm trying to say, okay, just type you. Just type you. All right. Just type understand. Short letter for you. Okay, don't say Alex predicting. Don't fucking listen to me. Okay. I could be wrong also what. But use this seasonal data as a roadmap, a guideline, okay, to tell you what the market might do in 2024. Okay. And I just want to let you guys know, okay, if you go on this Twitter or so on, Twitter or X, or you hear, I forget to share with you guys this over here, okay, this one. Is it this one? Personal, no, this one. This one, okay. Wow, this kind of news scare me. Business time. US stock market rally likely to carry through into 2024. Wow, cow. Wow, I really scared of this kind of bullish headlines in the news. Okay, 头脑派啦. Okay, October they never say that the market can go up. November they never say that the market can continue to go higher. December go up so high, market still never say much until 3 months have passed, one of the best quarters. Then the mainstream media then come out and say that the US stock market rarely likely to carry through into 2024. Wow, made me a bit scared. Okay, a lot of times when the market when the mainstream media is very bullish. Okay, a lot of times, okay, the opposite things will happen. A lot of times the opposite things will happen. And if you take a look at Twitter, many of them are, I mean that those analysts and all this they are pretty bullish into 2024. That makes me a bit worried also. Okay, of course, I'm not saying that you know 2024 is going to be a crash or a down year. It can still go higher. Okay, but don't expect to be easy. Can be choppy. So market go up, come down, correction, go up, correction, go up, correction, go up, correction. So you're kind of grinding and wear you down. So stock selection is very important. It's not that easy to trade. Okay, and I also want to share with you guys is this. I think I shared with you guys, I think 2 weeks ago or so, or is it during the YouTube video? So the annual stock market return during election year, okay, it spanned from 1922 until 2020. Okay, as I mentioned before, right? Okay, most of the time election year, okay, it is positive. Okay, there's only 4 times. Okay, all right, out of these 24 instances, okay, 24 instances, okay, where the market return is negative. So I'm still expecting next year to be a positive year. Okay, but not as good as this year and more difficult to trade. And if you take the average of everything, okay, all right, the average return is about 11%. Okay, as like what I said previously. Okay, so this year the S&P 500 is about 25%. So don't expect it to be 25% next year. So let's halve it. Also about 11 to 12%. Okay, but this 11 to 12% will not be easy to trade the market, and there could be a lot of whipsaw, choppy. Okay, Ken. So if you find my outlook to be useful, just type me in the comments. Entertain me a little bit, okay? Give me a like, okay? Share or comments. Liking is free, doesn't cost you money. Okay, so you guys can screenshot this or whatsoever. The roadmap for election year. Okay. In fact, okay. As of now, I am a bit bearish for the coming weeks already. I'm a bit bearish already. Okay, since January, February, March, I think January I will be a bit bearish already. So actually, I have prepared the bearish data for the seasonal vantage insiders already. Okay, I'm ready to send it out. I think earliest by latest by next week or so. So I will send you guys the bearish data for free. Okay, no additional charges to prepare ourselves. Let's say if January is really a down month. Actually, in fact, I have seen some stock that's like, some of the smaller cap stock is not doing so well already. And you can see that, right now, the last trading day of the year, you can see that, the Russell 2000 is already down about 1.5% already, not so good already. Okay. All right. So I will share the data to the seasonal vantage for free. Okay. All right, Ken. And just to let you know, okay, this seasonal vantage, right? Insiders, right? I repeat, okay, it is last call, okay, last call over here until the end of 31st December, end of the year, okay. All right. So in case you don't know, all right, so you'll be giving a login page, and this is how you will see inside the seasonal vantage insiders. All right. First of all, okay, if you want to do manage your subscription, and such, right, you can just go to the own settings over here. Okay, you want to cancel, very easy one. Don't need to go through me. You can cancel it yourself, your data, your subscription. Okay, all right. You can just cancel. Once you cancel, you'll be immediately canceled. Okay, but due to the limitation of the platform, you won't be built the next cycle, but you won't be able to access the members area immediately. Okay, once you cancel the subscription. Okay, all right, which means that after 3 months, you won't be built for the next cycle already. So immediately you'll be canceled. Okay, you want to you want to adjust, edit your card details. It is also inside here. Okay, notification you can edit also. All right, can. Okay, so this is this. Okay, so the report will be here. January to March report over here. Okay, I already prepared the bullish data. Excel spreadsheet, January to March. Okay, ETF spreadsheet, January to March. PDF also have January to March. Okay, ETF, January to March. And the insiders area over here, this is the members area, where I share with you some of the weekly updates and a lot of these insider updates also, exclusive updates for the insiders only. So midweek, I usually don't do, but I did this week. Okay, some of the comments and such, okay, like they take profit on some of the gold, which I mentioned, gold minus metals. Okay, all right, and then the market updates. Okay, all right, and then the usual data, okay, things. Okay, and then some of the masterclass where I share with them, like for example, like I share with them how to use the understand the wash and rinse trigger. Okay, and then trading, this one is free. So it is on MarketWise Asia Telegram chat, not Telegram, the YouTube channel. I show you how to set up the cloud pivot point and central pivot range. Okay, on TradingView, exactly like what you are seeing on my chart. So all these are being here inside the members area, and this is what you get. All right. And just to share with you some of the case study, okay, a short one, okay, a short one over here. So the case study that I did, okay, let me see, case study that I did, okay, I think is it here? Is it this one? Yeah, okay, for the 26th of December, okay, this week, okay, for the seasonal advantage insiders, can see that this member area over here, right? So this 26th December, it is actually this video, okay, this YouTube video. All right, I mentioned about this ETF, lithium and battery tech ETF. So I mentioned that, hey, based on this seasonal data, we are in a favorable period. Okay, I think that there's a wash and rinse pattern, price can go up also. So this is lithium. So I mentioned that on Tuesday. So this is how the ETF look like now. Okay, can you see that? This is the lithium. All right, of course, today is down. I actually exited when the market opened about 10:30. I think I exited about 10:45 that kind. But anyway, not important. Just to show you guys that this is the one over here I mentioned about here. Okay, all right, then price go higher. So there's profit to be made. you enter. And earlier, I actually talked about, I think I didn't put here. Is it this one? No, not this one. Okay. Earlier, I mentioned about this gold, GDX, gold miners, and all these. So like for example, like GLD is the gold stocks over there. Okay, this is the gold ETF, right? I said, hey, you know, there's a wash and rinse pattern over here. Okay, all right. So you know, you can take a look. We are in the favorable period. Okay, take a look at the metals and the metal miners. So after that, price go higher. I think quite enough. I think for example, like Henry here, right? I think benefited from this some of these trade ideas from the metals and miners. If you benefited from these metals and the miners, okay, just type once again, just type me in the comments. Okay, all right. Sure have one. I think quite a number of you here are insiders, right? So I personally entered into GDXJ. This is the junior gold miners. Okay, also not too bad. Okay, and I also told them then, I also told them to, you know, when there's profit, remember to take some profit off the table. Okay, and then price for the past 2 days started to come down already. Okay, all right. I'm not saying that you continue to go down lower, but you know, it is all often, you know, wise to take some profit off the table if there is profit, especially okay if you are doing swing trading or so. Okay, can so if you want to see more examples of case studies previously, okay, you can just head over to YouTube MarketWise Asia, all right, and then you go to our channel over here. Just search for MarketWise Asia lah. Okay, all right. Under MarketWise Asia, you go to this video over here. Actually, it's here lah. Okay, can you see over here? Case study and platform. You can just go to videos, right? Just head over to the case studies and the platform walkthrough. Have more details of the, I think for the past, how many weeks of stocks that I mentioned, okay, and how it worked out for the insiders also. Okay, everything good? So once again, our last call, all right, $99 every 3 months. This is the grandfather price. I will not offer it, okay, anymore. This is the first and the last time because I'm transiting to a new membership platform. Once again, $99, you can cancel anytime. No need to go through me. Okay. All right. So it's very simple for you. But once you cancel, okay, you won't get back 99. Be 179. 179. Okay. Okay. So as I mentioned, right? Okay. What's it? Okay. The guideline roadmap. The next Monday, the next week will be the trading day of 2024, January. So I using this guideline, okay, this roadmap, okay, I don't think the market is going to be easy, okay, for the 2024. And the reason is also because, okay, can you see that the market has been grinding up for so long already, okay? Just at this, okay, rallied for so many months, not so many months, since November is a very huge rally, you know. Don't have a kind of a deep pullback over here. We don't have a deep pullback. So for the market to be more sustainable, okay, it is normal, it is necessary to have a pullback. So, okay, don't be afraid of pullback. Don't be afraid of a pullback, okay? So I'm anticipating that January there could be some downside move lah, okay? And I actually, okay, just give you one trade ideas. I was looking through the bearish seasonal data, okay? One thing that caught my attention, okay, the bearish seasonal data is this company called, I think it's LZB, okay? LZB over there, all right? I think for the past 10 years, okay, during the January period, it generally tends to go down lower. Will it happen this time? Okay, I don't know. Okay, I'm looking at this to go for a short. In fact, trying to go for a short today. I will see how it goes. Don't copy me. I'm just sharing with you what I see from the data. So yeah, this I don't want to pronounce okay. Lazy boy or LZ boy or lazy boy. Essentially, this is a furniture maker. This is a furniture maker. You can see that this is a consumer durable home furnishing. Okay, the market cap. It's a small cap. It's about 1.5 billion. 1.5 billion company, market cap. So I'm looking to starting to short maybe some of the stocks already. Okay, I will share with the insiders next week. Okay, Ken. All right. I think as of now, I think that's all for today's session. Okay. Any question for me? Any question for me? I think can answer a few questions. All right, Ken. The market today is down. All right. It doesn't end positively for the last day of the trading year. Okay. Any question for me? So for the seasonal partnership insiders, last call. Okay. All right. Until 31st December, I'll post the link in the comments. So once again, you'll get the weekly updates, everything from me. And I think I say already, right? I will send you guys the bearish data just to prepare for ourselves in case it really does happen that January, February, and March is bearish, okay, correction. Then we can try to profit from this correction, okay. Sorry, choked out. For the gold, still okay. It's actually still okay. In fact, for the seasonal data, the gold price, silver price, it tends to go into January as well. But as I mentioned, right, if you have profit, okay, do throw them or get some profit off the table. Sorry, yeah. So I have no idea how it will pan out, but based on seasonal data, it tends to go higher into January. But do expect maybe have some correction. But for me, I already exited my gold position. So I'm looking forward to the next set of new trading ideas already. Okay. All right, Ken. I think does that answer your question, Henry? Into January it tends to continue, but you have profits, get profit off the table. Okay, Ken. All right. Any other market internal pricing today to search where price may go next, expected price level? I don't have the expected price level. So there is, since you asked that, right? So I'm also watching the VVIX ratio over here. Since you asked, I forgot to mention, okay, VVIX ratio. So the VVIX ratio, okay, this is the VVIX over here. All right. So for those who don't know what's VVIX, never mind. Okay, this is a market internals. Okay, typically, they tend to move in tandem. Okay, move in tandem. VVIX over VIX. Okay, VIX is the the fear kind of a gauge, right? Okay, so it's VVIX over VIX is to measure the volatility of volatility. In VIX, you're measuring the volatility of S&P 500, right? So VVIX is actually measuring the volatility of the volatility. Okay, so VVIX ratio doesn't matter. Okay, just share with you guys first. So can you see that over here? All right. So while the market continue to go higher, right? Continue to go higher. Okay, the VVIX ratio is starting to stagnant already. Okay, stagnant already, and there's a kind of a this one. Okay, I suddenly forget the word after choke. What is this? What is this thing called? Shit, I forget the word. Can somebody help me or not? What is this? This technical term, suddenly really forget. So it means that this is moving higher, but this is coming down already, okay, for the VVIX ratio. All right. Yes, divergence. Thank you so much. There is divergence. So we are seeing divergence over there for the VVIX ratio over there, okay? While the market is going higher, okay, while the market is going higher over here, going higher, okay, the VVIX ratio is showing divergence. So, okay, it doesn't mean that the next day the stock market is going to drop. It's not like that. It just gives you some warning signal, okay, that the market might be heading for top, okay, and you need to know, okay, when the VVIX ratio approaching, the 7 to 8 level over here, this is at the top area, Can you see that, at the bottom, okay, picking the bottom, VVIX is about 3 to 3.6 there. The area lah. At the top, we are near the top already. So I'm not surprised if the market does have a correction into the first quarter of the year, and especially since a lot of analysts, a lot of gurus are very bullish into 2024. So I don't know whether I'm the first one to say that or not. I don't know lah. Okay, I am in fact pretty bearish. Okay, for the first quarter of the year. Okay, all right. I'm not predicting now. Okay, I'm just sharing with you my opinion. My opinion. Whether it can pan out or not, I don't know. I don't know. So don't listen the fuck out of me. Okay, I have no idea how it pan out, but my opinion and seasonal data, okay, plus sentiment, I feel that first quarter of 2024 is not going to be that easy. So you hear from me first, okay? I think I'm the first one, is it? To say not so bullish thing about the market for the first quarter of the year. Is it me or not? You think it's me? Just type yes in the comments. Am I the first one in Singapore that say that not so bullish one for the first quarter of the year? While everybody is like very, very bullish. I'm not bullish. I'm not that bullish. Okay? So wary of that plus the market internals and such. Okay? All right. Any other questions so far? Okay. So let's look back. I don't know, maybe in 1 month's time or a few weeks' time to see whether my kind of roadmap can pan out like what I say or not. Okay. All right. So if you find value in this session, just type value in the comments. Okay. Just type value in the comments. Okay. And this is the last day of the trading year. Okay. If you find value, just type value in the comments over here. Okay. Can. So I think, I think with that, okay, so let me share with you the election year seasonal data over here. So this is a roadmap, a guideline for you to see. Not exactly you will follow that, but a lot of times I think that the seasonals does rhyme. So use it as a roadmap, as a guide to follow you at least through the first quarter of the year. Okay, Ken? And with that, I thank you so much for staying with me. The next Facebook Live will be on the 8th of January. As I mentioned, I'll be transiting to a Monday Facebook Live at 10:30 p.m. 10:30 p.m. So with that, thank you so much for staying with me. I wish you guys have a very good New Year, Happy New Year, prosperous New Year ahead in 2024, and see you guys again next year. Bye-bye.